Hey everyone, welcome back to Corporate Decoder, the place where we break down the hidden stories in corporate filings. And today we've got a deep dive into the Project and Trade Finance Core Fund's latest report, the kind of document that usually puts people to sleep. But trust me, there are some juicy details in here that could tell us a lot about where the big money is flowing and how risk is being managed. Before we dive in, if you appreciate getting straight insights from these dense financial documents, make sure you are subscribed. And if you want to chat more about these insights, join our Discord community, linked in the description below. So what is this report all about? It is essentially a look under the hood of the Project and Trade Finance Core Fund, a portfolio within the larger Federated Hermes Core Trust III. Think of it as a snapshot of where investors' money is parked for the 6 months ending the 30th of September 2025. Now, right off the bat, they tell us this fund is not for the everyday investor. It is for organizations and entities that are considered accredited investors or qualified purchasers. This means we are talking about sophisticated money, not your average Joe or Jane investing their retirement savings. Let's talk about where the money is going. The report breaks down the fund's investments by security type, and the numbers really tell a story. A whopping 92.9% of the net assets are tied up in trade finance agreements. That is a huge chunk, a clear signal that this fund is focused on financing big business deals, especially in global trade. We see some diversification within these trade finance agreements, touching industries like air transportation at 3.4%, automotive at a tiny 0.2%, and banking, which makes up a solid 10.5% of the trade finance agreements. Then there is metals and mining, utilities, communications, energy, and foreign sovereign debt. Notice the heavy concentration in energy, with integrated energy at 9.8% and oilfield equipment and services at 7.2%. This suggests a strong bet on global energy projects. The fact that 11.6% is in foreign sovereign debt signals a willingness to take on risk in emerging markets hoping for higher returns, but also facing the unique risks associated with government finances. By the 30th of September 2025, the fund managed a massive $1,376 million in net assets. That is a lot of money, and it shows the scale of operations this fund is dealing with. Let's look closer at the top security types. Cash equivalents are a mere 4.7%. The vast majority, 92.9%, is in trade finance agreements. This is not a fund for conservative investors seeking stability. It is for those looking to finance large-scale projects and trade deals betting on economic growth and global commerce. Interestingly, the number of investments is just 134. This indicates a highly concentrated portfolio managing a huge amount of money with a relatively small number of major investments. This concentration amplifies both the potential for high returns and the risk of significant losses if any of these large investments go south. The portfolio turnover is at 22%. This is quite low for an investment fund, suggesting a buy and hold strategy for many of its investments, likely reflecting the long-term nature of trade finance deals. They are not actively trading in and out of positions. Scroll, for example, a significant chunk is in air transportation with a 3.4% allocation. The fund holds agreements like Avalon TLB 2030 with a 5.885% interest rate maturing in 2030, and Kwanzaa Limited Tag Linas Arias do Angolasa with a 9.314% interest rate. This shows direct investment in aviation finance, a sector that can be volatile, but also offers significant returns. Scroll, let's talk about risk. The report highlights that a substantial part of the fund's portfolio may be comprised of entities in the energy sector. This means the fund is particularly vulnerable to economic, business, political, or other developments that specifically affect energy companies. If oil prices tank or new regulations emerge, this sector could significantly impact the fund's performance. Alright, that is our breakdown of the Project and Trade Finance Core Fund's latest report. What is your take on these numbers and what they signal for the company's future, particularly the heavy reliance on trade finance agreements and energy sector bets? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more insights and discussions. Thanks for watching. See you next time.